Hello students and welcome to the lecture. So students, as you know that in the previous lecture, we had started our discussion over these three things like nationalization of banks, public sector lending, PSL, and financial inclusion, right? These were the three things on which we had started our discussion. This, this, and this. And that was our part one. In part one, we had discussed the several things. And in this part 2, we are going to extend this topic further up to the level where we required a more knowledge about it and we will take a deep into the more discussion. Alright. So in this lecture, we will talk about the more points related to the PSL categories, other important points related to the PSL, financial inclusion involves which, some important initiatives for the financial inclusion that we will see, lead bank scheme we will see, no frill account we will see, BSPDA, basic savings and bank deposit account that we will see, business correspondent that we will see, Pradhan Mantri Jan Dhan Yojana that we will see, Jan Dhan to Jan Suraksha that we will see, Pradhan Mantri Jeevan Jyoti Bima Yojana PMJJBY that we will see, Pradhan Mantri Suraksha Bima Yojana PMSBY that we will see, Atal Pension Yojana APY that we will see, and at last we will have the discussion over the summary. But before this, as usual, we have our small disclaimer that is presented over. That is what we require to understand before we proceed. So the disclaimer is like, the images used in a slide deck are for educational purposes only. We respect the intellectual property rights of the original creators and owners of these images. If you are the owner of any of the images used in this deck and have any concerns or issues, please contact us at sathee@iitk.ac.in and we shall remove the images. Now, let's begin with the more points that related to the PSL sector categories. As we know, PSL stands out for the priority sector lending. So first we will see target for a foreign banks that operate in India and having less than 20 branches in India. Total priority sector target of 40% for foreign banks with less than 20 branches has to be achieved in a phased manner. Like in 2017 to 18, it was total priority sector as percentage of NCBC, A and BC, or credit equivalent amount of off-balance sheet exposure, whichever is higher. That was 36%. 2018 to 2019, 38%. 2019 to 2020, 40%. And still in 2024, it is 40%. There is no change in the data. Okay. Then the additional priority sector lending target of 2% of A and BC each year from 2016 to 17 to 2019 to 20, still in 2024, the data is same, has to be achieved by lending sector other than exports. Remember, lending to sectors other than exports. Computation of adjusted net bank credit, A and BC credit bank credit in India. The bills rediscounted with Reserve Bank of India and other approved financial institutions. Net bank credit. Bonds, debentures in non-statutory liquidity categories under HTM category. Plus other investment eligible to be treated as priority sector. Plus outstanding deposits under RIDF and other eligible funds with NABARD, NHB and SIDB on account of priority sector shortfall plus outstanding PSLCS. Okay. Then eligible amount for exemptions on issuance of long-term bonds for infrastructure and affordable housing. Eligible advances extended in India against the incremental FCNR qualifying for exception from CRR SLR requirements. Then A and BC. After this, now let's have a talk on the agriculture. Like the farmers with land holding up to 1 hectare, these are considered as the marginal farmers, so that's why they are the part of PSL, priority sector lending. Farmers with land holding more than 1 hectare and up to 2 hectares considered as small farmers under the PSL. Okay, so if having the land holding up to 1 hectare only, marginal farmers, 1 hectare up to 2 hectares, small farmers. After this, micro, small, and medium enterprises, MSMEs. So the limits for investment in plant and machinery equipment for manufacturing service enterprise as notified by the Ministry of Micro, Small, and Medium Enterprises dated on 9 September 2006 when it was announced. So it was like for the enterprises that are included in the manufacturing sector. If it is a micro enterprises, then investment in plant and machinery. A small enterprise which does not exceed the investment from 25 lakh rupees. Medium enterprise more than 25 lakh rupees but does not exceed 5 crore rupees. More than 5 crore rupees but does not exceed 10 crore rupees. Okay. Enterprises that are involved in the service sector. Micro enterprise, investment in equipments. Small enterprises does not exceed rupees 10 lakh rupees. Medium enterprises more than 10 lakh rupees but does not exceed 2 crore rupees. More than 2 crore rupees but does not exceed 5 crore rupees. Okay. So this is what we can say. Alright. Note all loans to the units in KVI sector will be eligible for classification under the 7 sub-targets of 7% and 7.5% prescribed for the micro enterprises under the term of priority sector. Okay. Now, the export credit. The export credit extended as per the details below would be classified as priority sector. Domestic banks, foreign banks with 20 branches and above, foreign banks with less than 20 branches. Domestic banks, incremental export credit over corresponding date of the preceding year, up to 2% of ANBC or COPE, whichever is higher, effective from 1st April 2015, subject to a sanction limit of 25 crores per borrowers to units having turnover of up to 100 crores. After this, incremental export credit over corresponding date of the preceding year, up to 2% of ANBC or COBE, whichever is higher, effective from 1st April 2017. Then, export credit will be allowed up to 32% of ANBC or CEOBE, whichever is higher. Okay. Thereafter, now the housing. So, the loans for repairs to damaged dwellings units of families up to 5 lakh in metropolitan centers and up to 2 lakh in other centers. Bank loans to any governmental agency for construction of dwelling units or for slum clearance and rehabilitation of slum dwellers subject to a ceiling of 10 lakh per dwelling unit. Bank loans to the housing finance companies, which are known as the HFCs, approved by NHB, National Housing Bank, for their refinance. Like refinance, what do you mean by this? So basically, suppose if there is any housing finance company and all, which are approved by the National Housing Bank, which is an apex institution in terms of granting the loans to the housing sector. So generally what happens here, like we could say, suppose housing finance companies having the 100 crores fund to lend out for the financing of housing sector. Okay, that is what we are assuming. Now there is a situation. What is the situation? Like this 100 crores would be highly demanded by the people if they really want to finance their houses. Okay, so 100 crores out of this 60 crores have been lended out to the people. Now the more and more people reaching to the HFCs, which means the HFC will be now under the shortage of 60 crores. This is what I'm trying to say. Now you can say demand is still there, but supply is not. Again, I'm repeating. Demand is still there, but supply is not. Okay. Then the NHP will give additional 60 crores the HFC required to the HFC at the time of refinance. Like financing the institutions which are financing the people. Because they having the limited resources, and once they will start their financing business, their resources will be out. Okay. 4 on lending for the purpose of purchase, construction, reconstruction of individual dwelling units or for slum clearance and rehabilitation of slum dwellings, subject to an aggregate loan limit up to 10 lakh rupees per borrower. Okay. Now others. So the loans not exceeding rupees 1 lakh per borrower provided directly by banks to the individuals and their SHG and JLG, provided the individual borrower's household income in rural areas does not exceed rupees 1 lakh per annum. If it is exceeding rupees 1 lakh per annum, then they will be not considered as the PSL. Okay. And for non-rural areas, it should not exceed 1,60,000 to 2 lakh rupees cycle. If it is exceeding, which means that they will not be included as the part of priority sector lending. Loans to distressed persons not exceeding rupees 1 lakh per borrower to prepare their debt to the non-institutional lenders. Loan sanction to the state-sponsored organizations for the scheduled caste and scheduled tribes for the specific purpose of purchase and supply of inputs and on the marketing of the outputs of the beneficiaries of these organizations. Okay. Then other important points related to the PSL or priority sector lending. Monitoring of priority sector lending targets. To ensure continuous flow of credit to the priority sector, there will be more frequent monitoring of priority sector lending, compliance of banks on quarterly basis instead of annual basis of now. Because annual basis will become after the tenure of 12 months. Okay. Like 12 months will be completed, then the you can say compliance checkout monitoring will become. But quarterly basis means after every quarter, after every 3 months, the lending compliance will be monitored. Okay. And that is what is required currently. Thereafter, the data on priority sector advances have to be furnished by the banks on quarterly and annual intervals as per revised reporting formats. After this, non-achievement of priority sector targets. Scheduled commercial banks having any shortfall in lending to the priority sectors shall be allocated amounts for contribution to the Rural Infrastructure Development Fund (RIDF), established with NABARD and other funds with NABARD, NHB and SIDBI, as decided by the Reserve Bank from time to time. The interest rates on banks' contribution to RIDF or any other funds, tenor or deposits, etc., shall be fixed by the Reserve Bank of India. After this, what is on lending? Loans sanctioned by banks to eligible intermediaries for onward lending only for creation of priority sector assets. Financial inclusion and related schemes. Financial inclusion involves give formal banking services to poor people in urban and rural areas, promote habit of money savings, insurance, pension investments among poor people, help them get loans at reasonable rates from normal banks so they don't become victims in the hands of local moneylender. Some important initiatives for financial inclusions. First, lead banking scheme, LBS. No Frills account, NFA, BSBDA, Business Correspondent System, BCS, Sobiman Campaign, PMGDY. Okay, this is what. After this, what is the LBS or lead bank scheme? The lead bank scheme, introduced towards the end of 1969, envisages the assignment of lead roles to the individual banks, both in the public sector as well as in the private sector, for the districts allotted to them. Like you can say, they are required to lead the role as the individual banks for public sector, private sector in the districts they got to be allotted. A bank having a relatively large network of branches in the rural areas of given district, endowed with adequate financial and manpower resources, generally been entrusted with the lead responsibility for their district. Accordingly, all districts in the country have been allotted to various banks so that the banks could discharge their responsibility to them. The lead bank acts as a leader for coordinating the efforts of all credit institutions in the allotted districts. NFA or no frill account. No frills account is a basic banking account. Such account requires either nil minimum balance or very low minimum balance. Charges applicable to such accounts are low. The RBI in 2005-2006 called upon Indian banks to design a no frills account, no precondition, low minimum balance maintenance account with simplified KYC known as the Know Your Customer norms. All the existing no frills accounts opened were converted into the BSPDA in compliance with the guidelines issued by the Reserve Bank of India in 2012. Now, what do you mean by the no frill account? So generally, whenever you go to the bank and you opens your account, what you generally ask for? Like almost in every bank, you ask for to maintain some minimum balance in your account. Mostly in the private sector banks, it is 10,000 rupees. Like at any times, you are required to maintain rupees 10,000 balance in your account. If the balance will be below this, then you will be charges some fees, right? No frill account is actually the different type of account, like BSBDs. This account shall not have the requirement of any minimum balance, which means you are not required to maintain at least sufficient, you can say, amount in your account every time. The services available in the account will including deposit and withdrawal of cash at bank branch as well as ATMs, receive credit of money through the electronic payment channels or by means of deposit, collection of checks drawn by the central state government agencies and departments. While there will be no limit on number of deposits that can be made in a month. Account holders will be allowed a maximum of 4 withdrawals in a month, including the ATM withdrawal. Facility of ATM card or ATM cum debit card will be there. Now, let's have a look on the business correspondents. Business correspondents are banks representatives. Personally go to area allotted to them and carrying out their business banking. Help villagers to open bank accounts in banking transactions, etc. Like banks generally send their representatives to the various areas where the bank's operations are not that much successful. So these correspondents or these representatives have to visit the place physically, consult with the local, making out the plan and do the needful. Business correspondents get commission from the bank for every new account opened, every transaction made by them, every loan application processed, etc. So that they could be working there. Now, if we talk about the current status of the Pradhan Mantri Jan Dhan Yojana as on 2024, so bank time, public sector banks, number of beneficiaries, rural, semi-urban, central bank branches, 2.25 crores. Number of beneficiaries at urban metro central bank branches, 15.58 crores. Number of rural urban female beneficiaries, 23.05 crores. Number of total beneficiaries 41.82 crores. Deposits in account in crores 181211.16 crores. Number of rupee debit card issued to 31.68 crores. Regional rural banks 8.58 crores. Thereafter 1.144 crores, 5.83 crores, 10.02 crores, 45780.85 crores, 3.53. Private sector banks 0.74 crores, 0.92 crores, 0.89 crores, 1.65 crores, 6898.91 crores, and 1.37 crores. Rural cooperative banks 0.19 crores, 0.00 crores, 0.10 crores, 0.19 crores, 0.01 crores, 0.00. Grand total is 35.75 crores, 17.93, 29.88, 53.68, 233,890.92, 36.58. Now, Pradhan Mantri Jan Dhan Yojana, PMJDY, if we talk about it. So, Honorable Prime Minister announced Pradhan Mantri Jan Dhan Yojana as the national mission on financial inclusion in his Independence Day address on 15th August 2014 to ensure comprehensive financial inclusion of all the households in the country by providing universal access to the banking facilities with at least one basic account to every household, financial literacy to use that account, access to the credit, insurance, and pension facilities. Under this, person not having the civic accounts can open an account without the requirement of any minimum balance. In case they self-certify that they do not have any of the officially valid documents required for opening a savings account, they may open some small account also. Further, to expand the reach of banking services, all over 6 lakh villages in the country were mapped into 1.59 lakh sub-service areas with SSA typically comprising of 1000 to 1500 households, and in the 1.26 lakhs SSAs that did not have a bank branch. Bank Mitras were deployed for branchless bankings. Thus, the PMJDY offers unbanked persons easy access to the banking services and awareness about the financial products through financial literacy programs. In addition, they received a RuPay debit card with inbuilt accident insurance cover of rupees 1 lakh and access to overdraft facility upon satisfactory operation of account or credit history of 6 months. Further, through a Prime Minister's Social Security Scheme launched by the Honorable Prime Minister on 9th May 2015, all eligible account holders could access through their bank accounts personal accident insurance cover over Pradhan Mantri Suraksha Bima Yojana, life insurance cover under Pradhan Mantri Jeevan Jyoti Bima Yojana, and guaranteed minimum pension to subscribers under Atal Pension Yojana. PMJDY was conceived as a bold, innovative, and ambitious mission. Census 2011 estimated that out of 24.67 crores households in the country, 14.48 crores, 58.7%, had access to the banking services. In the first phase of the scheme, these households were targeted for inclusion through opening of a bank account within a year of launch of the scheme. The total achievement by 26 January 2015 was 12.55 crores. As on 29 March 2017, number of accounts has grown to 28.17 crores. Further, in 2011, only 0.33 lakhs SSAs had banking facility, and through provision of bank mitras in 1.26 lakh branchless SSAs, banking services were extended throughout rural India. The inclusive aspect of this is evident from the fact that 16.87 crores, 60% of PMJDY accounts are in rural areas, and 14.49 crores or 51% PMJDY account holders are women. The deposit base of PMJDY accounts has expanded over time, As on 29th March 2017, deposit balance in PMJDY account was rupees 972 crores. Average deposit per account has more than doubled from rupees 1064 in March 2015 to rupees 2235 in March 2017. The Bank Mitra network has also gained in strength and usage. Average number of transactions per Bank Mitra on Aadhaar-enabled payment system operated by Bank Mitras has risen by over 80-fold from 52 transactions in 2015 to 4,291 transactions in 2016 to 2017. From Jan Dhan to Jan Suraksha, for creating a universal social security system for all Indians, especially the poor and the underprivileged, Honorable Prime Minister launched three social security schemes in the insurance and pension sector on 9th May 2015. Pradhan Mantri Jeevan Jyoti Bima Yojana, PMJJBY. It is available to people in the age group of 18 to 50 years having a bank account who give their consent to join enable auto debit. Aadhaar is the primary KYC for the bank account. Life cover of rupees 2 lakhs is for the 1 year period stretching from 1st June to 31st May and is renewed. Risk coverage under this scheme is for rupees 2 lakhs in case of death of the insured due to any reason. Premium is rupees 330 per annum, which is to be auto-debited in one installment from the subscriber's bank account as per the option given by him on or before 31st May of each annual coverage period under the scheme. The scheme is being offered by the Life Insurance Corporation LIC and all other the life issuers who were willing to offer the product on a similar terms with necessary approvals and tie up with banks for this purpose. As on 31st March 2017, cumulative gross enrollment reported by the banks subject to the verification of eligibility etc. over 3.10 crores under the PMJJBY. Total of 62,166 claims were registered under the PMJJBY out of which 59,118 have been disbursed. Pradhan Mantri Suraksha Bima Yojana available to the people in the age group of 18 to 17 years with a bank account who give their consent to join enable auto debit on or before 31st May for the coverage period 1st June to 31st May on the annual renewal basis. Aadhaar would be primary KYC for the bank account. Risk coverage under the scheme is 2 lakh for accidental death and full disability and rupees 1 lakh for partial disability. The premium of rupees 12 per annum is to be deducted from the account holder's bank account through auto debit facility in one installment. The scheme is being offered by the petty sector general insurance companies or any other general insurance company who are willing to offer the product on similar terms with necessary approvals and tie up with banks for this purpose. As on 31st March 2017, cumulative gross enrollment reported by banks subject to the verification of eligibility etc. is over 9.94 crores under PMSPY. A total of 12,534 claims were registered under the PMSPI, of which 9,403 have been disbursed. Thereafter, Atal Pension Yojana (APY), launched on 9th May 2015 by the Prime Minister. APY is open to all saving bank post office saving account holders in the age group of 18 to 40 years, and the contributions differs based on the pension amount chosen. Subscribers will receive the guaranteed minimum monthly pension of rupees 1,000 to rupees 2,000 or rupees 3,000 to rupees 4,000 or 5,000 at the age of 60 years. Under APY, the monthly pension would be available to the subscriber, after him to his spouse, and after their death, the pension corpus, as accumulated at the age 60 of the subscriber, that would be returned to the nominee of the subscriber. Minimum pension would be guaranteed by the government. Therefore, if the accumulated corpus based on the contribution earns a lower than estimated return on investment and is adequate to provide the minimum guaranteed pension, central government would fund such inadequacy. Alternately, if the returns on investment are higher, the subscriber would get enhanced pensionary benefits. In the event of premature death of the subscriber, government decided to give an option to the spouse of the subscriber continue contributing to APY account for the subscriber for the remaining vesting period till the original subscriber would have attained the age of 60 years. The spouse of the subscriber shall be entitled to receive the same pension amount as that of the subscriber until that of spouse. After death of both the subscriber and the spouse, subscriber, the nominee of the subscriber shall be entitled to receive the pension wealth as accumulated till 60 age of the subscriber. As on 31st March 2017, a total of 48.54 lakh subscribers have been enrolled under APY. Total pension wealth of rupees 1,756.48 crores. Here we have finished the topic, not for the summary. Private sector lendings, we have talked about the targets for foreign banks. Computation of adjusted net bank credit, definitions we have seen. Micro, small and medium enterprises we have seen. Export credit we have seen. Housing and other loans we have seen. Monitoring we have seen. Financial inclusion initiatives we have seen. Goal of financial inclusion we have seen. Key initiatives like lead-based schemes, no frills account and BSPDA, business correspondents we have seen. Pradhan Mantri Jan Dhan Yojana we have seen. Social security scheme like PMJGY, BY, PMSBY, Atal Pension Yojana we have seen. Impact of PMJDY we have seen. And with this, we have finished this topic. Okay. So it is requested to all of you kindly revise the facts and figures that all we have discussed in this lecture and keep yourself ready for the next lecture. With this note, let's end this lecture and thank you.